Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories in corporate filings. Today we're diving into a report from Goldman Sachs Private Credit Corp. And let's just say it involves a lot of shares and a lot of dollars, so buckle up before we dive in. If you love getting straight answers from these complex financial documents, hit that subscribe button. And for more exclusive discussions and to connect with fellow finance enthusiasts, join our Discord community. The link is in the description below. Now, let's get to the juicy bits. Alright, so what we have here is an 8K filing from the 23rd of October 2025. Think of an 8K as a way for companies to tell the public about major events that happen between their regular quarterly or annual reports. It is like a stop the press announcement for important news. One of the big things happening here is the sale of unregistered shares. This means they sold shares without going through the whole formal registration process with the Securities and Exchange Commission. Or CF is saying this is okay because they're relying on certain exemptions under the law, specifically Section 4 ATU and Regulations D and S. These rules are generally for situations where the company is selling to sophisticated investors who can handle the risks without the full protection of a registered offering. And how many shares are we talking about? Well, as of the 1st of October, 2025, with the final numbers locked in on the 23rd of October. They sold a massive 11313991 Class I shares, and the money they got for these shares, a cool $283,302,339. That is a substantial chunk of change. And it tells us they're actively raising capital by selling new ownership stakes in the company. They're basically saying these shares were sold to investors who are either accredited investors, meaning they meet certain income or net worth requirements, or they are non-US persons, which suggests they're tapping into international markets as well. Now, let's talk about how the company is rewarding its shareholders. They're announcing a distribution for September 2025. This is essentially a payout, like a dividend, that companies give to their owners. For their Class I shares, the distribution is $0.19 per S-share. When you annualize that, it comes out to an annualized distribution yield of 9.1%. That is a pretty decent yield, especially when you consider the broader market. This payout is expected to be made around the 29th of October to shareholders who own the stock at the end of September. For those in their distribution reinvestment plan, this money will automatically be used to buy more shares. The report also gives us an idea of how the company's investments are performing. They're showing total return based on NAV as of the 30th of September 2025. NAV stands for net asset value, which is basically the value of the company's assets minus its liabilities. This metric shows how much an investment has grown, including any dividends or distributions that were reinvested. Looking at the Class I shares over the last month, the total return was 0.8% over 3 months. It was 2.2% year to date. They saw a 6.3% return. For the past year, it was 8.7%. And since they started operations back in April 2023, the return has been 10.2%. These numbers suggest a consistently positive performance, which is good news for their investors over various timeframes. Speaking of net asset value, let's dive into that. As of the 30th of September 2025, the entire company's net asset value, the total worth of the company, was approximately $7.9 billion. That is a massive sum. And on a per share basis for Class I shares, the NAV was $25.04. This tells us that each share represents a claim on about $25 worth of the company's underlying assets. The report also touches on fund leverage, which is basically how much debt the company is using to amplify its investments. As of the 30th of September 2025, their fund leverage was 0.5x. This 0.5x leverage means that for every dollar of assets, they have about 50 cents of debt. This is on the lower side of leverage for many investment funds. Lower leverage generally means less risk, but also potentially lower returns compared to using more borrowed money. They calculate this by looking at their average borrowings over the month compared to their average net assets. It suggests a fairly conservative approach to using borrowed funds, which can be a sign of stability. Now, let's put on our analyst hats and look at the bigger picture. Goldman Sachs Private Credit Corp is actively managing its capital as shown by the significant unregistered sale of equity. This indicates a strategy to grow the business and capital base likely to deploy into more investments. The healthy distribution yield of over 9% for Class I shares is attractive, and the consistent positive total return suggests the company is effectively generating value for its shareholders. The substantial NAV of nearly $8 billion and a relatively conservative leverage ratio of 0.5x point towards a well-established and financially sound operation. However, it is always wise to consider potential risks. While the unregistered sale avoids a lengthy registration process, It also means these shares are typically only available to sophisticated investors who understand the risks involved. The company itself cautions that past performance is not a guarantee of future results, and there is no certainty that returns will be met. Also, the preliminary nature of the reported data means that future official reports could show material differences. Investors need to be aware of this and not rely solely on this preliminary information. In conclusion, Goldman Sachs Private Credit Corp appears to be in a strong position, effectively growing its asset base and providing consistent returns and distributions to its shareholders. Their conservative use of leverage adds another layer of stability. While there are always inherent risks in investing, particularly with unregistered securities, the current data paints a picture of a well-managed and performing entity. Alright, that is our deep dive into the Goldman Sachs Private Credit Corp filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below if this analysis was valuable. Hitting that like button really helps us out, and subscribe for more of these corporate breakdowns. Don't forget to join our Discord community in the description for more insights and discussions. Thanks for watching, and we'll see you in the next video.